What's going on, guys, and welcome back to another very exciting video. Today we are going to be talking about PayPal's Q3 earnings as they are set to announce them after hours on Wednesday, November 1st. And what we're going to do in this video is we are going to take a look at analyst expectations around EPS as well as revenue, and then I'm going to give my opinion on both of those metrics. One, in my opinion, is more important than the other, so we are going to take a look into that and how that could affect valuation moving forward, because valuation of PayPal right now is extremely low, and I want to go over what we could see from EPS numbers that could affect that even further. So if you enjoyed the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. Let's start off by taking a look at PayPal's stock chart. We can see here today the stock was down over 2.5%, and over the last 5 days it is down almost 5%. We have seen the broader market trade down in a major way, even though earnings have been relatively positive so far for Q3. Over the last month, PayPal is down almost 14%, and over the last 6 months we see something similar to what we saw with SoFi, where the stock from its lows in May to the end of July traded up almost 25%. And at the end of July, it peaked out, and from there in Q3, it has traded down in a major way. We can see that the stock has fallen over 30%. So PayPal is set to announce their earnings on November 1st after hours, and we can see that analysts are expecting them to come in with an EPS number of $1.23 and revenue around $7.38 billion. And we can compare this to last year's Q3 earnings, where they announced $1.08 of EPS and $6.85 billion of revenue. And if PayPal comes in with $1.23 of EPS, that would be about 13% growth year over year. And if they come in with $7.38 billion of revenue, that would be about 7% growth year over year. Keep in mind, it's always good to look across a number of different sites to get an idea of what analysts are expecting on a larger scale. And on Yahoo Finance, we can see there are 32 analysts covering the stock for the current quarter, and they actually have an average EPS estimate of $1.16, a low of $1.11, and a high of $1.19. So these numbers are a little bit lower than what we saw on Google. However, if we scroll down, we can see that there have been a couple of revisions that have caused this number to drop. 7 days ago, the average EPS estimate was actually $1.23, similar to what we saw on Google. However, it is now dropped down to $1.16. So if we look over the last year, we can see that actually Q3 of last year, they came in with a 12.5% beat on analyst expectations, but over the last 3 quarters, they have come in line, 6% beat and 3% beat. So basically in line with what analysts are expecting. And analysts on Yahoo Finance actually have very low revenue numbers. They have an average estimate of just under $7 billion of revenue, and they are only expecting around 1.8% growth this year. But personally, I am going to be paying more attention to their EPS numbers. We can see that for the current year, there are 40 analysts covering the stock, and they have an average EPS estimate of $4.64, a low of $3.58, and a high of $4.71. And the reason EPS is so important to me is because it determines valuation. When we see EPS numbers going up and a stock staying the same price, that actually causes the valuation to drop. Right now, what we have going on with PayPal is EPS numbers are continuing to increase and the stock is dropping, which is helping their valuation in terms of their forward PE ratio in a major way. And I guess when I say helping, what I mean is it is dropping their valuation. And I like to buy companies that have very low PE ratios because that means I am spending less money for a dollar of earnings. And right now we can see that PayPal is trading at a forward PE ratio of 9 and a trailing PE ratio of 14.12. And over the last couple of quarters, we've seen PayPal's EPS numbers jump in a major way, all the way up to $3.57. And a lot of this has to do with the falling off of this negative quarter of negative 29 cents. And again, we can see that $3.57 actually gets them back around what we were seeing in 2021 and 2020 and close to their all-time highs of $4.39. And keep in mind that these earnings are on a GAAP basis. So last year they announced $1.15 of GAAP EPS, and what we can take a look at is how this earnings could actually change their trailing 12-month EPS number. So what we can actually do is we can take a look at their third quarter of 2022 and compare their GAAP versus non-GAAP EPS numbers. And their non-GAAP EPS number was that $1.08 that we saw on Yahoo Finance versus the $1.15 of GAAP EPS that we saw on Macro Trends. So what that means is there's about 7-cent upside for their GAAP EPS versus their non-GAAP EPS. So keep in mind, this isn't a perfect science at all. We're not always going to see a 7-cent difference between non-GAAP and GAAP earnings. However, if we account for this on Yahoo Finance, that means that a non-GAAP EPS number would be somewhere from around $1.20 to around $1.25. So what we would see happen to their trailing 12-month EPS number is this number would actually drop off of $1.15 and it would be replaced by somewhere around $1.20 to $1.25, which would cause their trailing 12-month EPS number to go up to around $3.65. And this would cause PayPal's trailing PE ratio to drop to around 13.5. And in terms of revenue, I'd really like PayPal to continue what they are doing because they have been a growth machine. We can look over the last 10 years, they have done an excellent job of growing their revenue year over year, all the way up to $28.5 billion. And if we go back to 2016, they were under $10 billion. So they have tripled their revenue in around 5 to 10 years. So personally, when I look at the expected results for PayPal, I want to see them come with a slight beat on EPS numbers and in line on revenue numbers. Revenue numbers have seen slower growth for PayPal over the last couple of quarters, but they saw a big pull forward in demand in 2020 and 2021, and EPS numbers are what investors are paying more attention to. They want to be invested in very solid companies that are profitable, especially if the economy seems to be headed in a bad direction. So I want to see them continue EPS growth and stay in line with revenue. However, keep in mind that I do own stock in PayPal. I like this company for the long term. Their valuation, in my opinion, is ridiculously low, and I have been buying up more shares over the last week as the stock continues to drop. So keep that all in mind. Do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.